let's get right to the three things you need to know as the clock hits 9 a.m. It is a busy day on Wall Street, and we're seeing mixed action in futures as GDP comes in better than expected, but earnings from big tech, they continue to disappoint.
Yeah, that includes shares of Meta plummeting this morning, down over 20% after the company missed revenue estimates for the second quarter in a row and lowered its outlook for the fourth quarter.
And supply chain problems and higher costs weigh on Ford's earnings. CFO John Lawler will join us later in the show for an interview you do not want to miss. But first, Julie, over to you on that Wi-Fi Interactive.
Yeah, just want to give you a little earnings tour this morning because we have a lot of movers we're going to get to besides those top ones we were just talking about, as well as the movement that we are seeing on the back of GDP. Meta shares right now down 22%. We've got Shopify as an earnings mover too, trending on the Yahoo Finance ticker page. It's up 5.5% after earnings. Credit Suisse announcing a big restructuring. It's down 12% in extended trading here in the United States. We're going to be talking later to the ServiceNow CEO. Those shares up 15% on earnings. So there is obviously a lot to get through. But first, want to take one more look at the futures here on the back of those GDP numbers that we got just a little while ago, and the movement that we saw in the futures on that GDP report, mostly upward here, coming out with a gain of 2.6% GDP growth, reversing 2 quarters of contraction in the U.S. economy. And perhaps even more encouragingly, the top line price index, 4.1%. That is smaller gain than estimated, smaller increase in inflation effectively than estimated last quarter. So that also feels like good news here this morning, Soz.
Julie, you're just on fire over there on that board. The screens couldn't even keep up with you. You're just blazing. All right, let's get back onto Meta. Meta getting another bite of reality in Q3 as the social media company continues to hemorrhage money on its metaverse investments. When asked about the aggressive spending Meta has put into Reality Labs, CEO Mark Zuckerberg urged investors to stay patient.
I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded.
Patience, catch a clue. This stock is getting beat down again. And we have seen this over the past couple of earnings periods or cycles for Meta. The Street, and I have a story on this right now on our homepage, yahoofinance.com. The Street wants to hear one thing from Mark Zuckerberg. Dial back these metaverse things. We are not going into the metaverse right now eating a Chipotle bowl. If you are hungry, you eat real food. Dial this stuff back. It is hurting the profit margins on Facebook at a time where it's seeing increased competition that's biting its sales. They don't get it. What are they doing? They appear to be investing even more in the metaverse, just completely tuning out what Wall Street wants to hear.
And a privacy change from Apple that they haven't figured out their way around. But you talk about that spending that they're going to continue to move forward with. At this point in time, they're projecting that total expenses for 2022 are going to come in around $85 to $87 billion. Billion with a B there. Going out into 2023, they're looking at total expenses coming in at $96 to $101 billion. This is continuing to invest heavily in the metaverse. They've also got some of the office refinement that they're going to be doing too. And so with all of that in mind, it still does come where you're seeing some of the shrinking advertising budgets in the near term over that period of time where this spending is also going to be taking place. And you got to wonder, for a company that is seeing pre-market its shares hit some of those early 2016 levels, if investors really want to stick around for the ride.
They don't. At least not a lot of them don't, right? I mean, that expense line is really the thing that analysts and investors are highlighting, the fact that they're spending so much money and they don't have much to show for it. Yes, Zuckerberg's asking for patience, but it would be easier to be patient if there were at least some early signs of encouraging things on that front. Horizon Worlds, which is the metaverse product, right, that he walks around in, they just got legs. It was very exciting, allegedly. Fewer than 200,000 monthly active users. The original goal was 500,000. So obviously falling well short of that. And also it was telling on the call, you don't often hear, and I know you know this, Soz, you listen to a lot of these calls, you don't often hear analysts for a company this size getting a little bit testy, getting a little bit impatient on the call. Mark Mahaney, friend of the program, who we speak to frequently, saying the ad tools, that he doesn't feel like they are focusing enough on these ad tools to cope with the Apple tracking changes and the other sort of macroeconomic changes. He says, listening to the call, I just don't hear it as a major investment priority. And it's unusual to hear that kind of frustration.
And Mark is not the only one that gets it here. I have to give a shout out to Benjamin Black over at Deutsche Bank, writing in his note The OPEX guidance for next year is the wrong number at the wrong time for investors. And what are investors doing? They're voting with their feet in the real world and getting out of the stock.
All right. Well, we're going to continue to watch Facebook as we get closer to, Facebook parent company Meta.
I know that.
Shares.
Well, we still do that, and that is part of the issue, right?
Yeah.
We do, Meta is not a thing. It's still not a thing as much as they want it to be a thing.
No.
Anyway.
Exactly. It's like trying to make fetch happen. All right.